Welcome back to Market Day Report. I'm Scott Shellady still, and the Cow Guy still. Thanks for joining us today. Thanks for staying with us. Why don't we take a look at what's happening in the markets, because that's why you all tuned in. We just punched up that corn table. Let's see what the change is on the day there. Giving back some real estate in that September, but that's coming off the board here quick. Let's look at December. That's down 8.5 cents at 5.45.5. We've got March off 7.75 cents at 5.52.5. Moving right along to the soybeans. What do we have happening there? A lot of the same SEP-NOV kind of spread movement. SEP giving back a lot of real estate, but November's down 13.75 cents at 13.09.5. We've got January down 12.25 cents at 13.15. How about wheat? That wheat table, this is Chicago wheat, sharply unchanged in September, which is not really par for the course there. December's up 1.25 cents at 7.33 and March up 1.5 cents at 7.46 moving right along to Kansas City. Hard red wheat in Kansas City, here we come. That September is also unchanged there, but December is off 1.75 cents, quiet, 7.22 March is also off 1.75 cents at 7.31 even. How about spring wheat in Minneapolis? That September market is off 15 cents, kind of coming back in line. December down 7 cents at 9.10 March down 4.5 cents at 8.98 Finally, let's take a look at cotton. How's that cotton market doing? Cotton's off 74 cents in October at 95.53, while December's off 75 cents at 94.09. And joining us is we've got Todd Horowitz from Bubba Trading. Todd and I go way back. Todd's an ex-floor guy. He's coming to us from Chicago. All right, Todd. A week from today, we all have the day off. What are your thoughts about these markets and this week in general?
Well, I won't say it's only August, Scott. I say I'll see you in September, or September is coming. But you know, look, it's just dead. I mean, it's gonna get slower this week unless there is a major news event that's going to drive these markets. And I think another thing that is hurting the grain markets here is the overwhelming demand in equities, which are skyrocketing once again. And look, that takes away some outside money. So between nothing going on and outside money being poured into the equities, there's not really a lot of reason to be involved in anything right now.
Well, I mean, they've been really attracting a lot of the attention. The outside markets have been something, you know, this is my anniversary of my now 2 months, right? I've made it here 8 weeks. So if you had the under, I'm sorry to disappoint you. But they haven't gotten rid of me yet. But the outside markets have affected us a lot since I started, is what I'm trying to say. And now we've got a big number at the end of this week. We've got non-farm payrolls. We also have ADP midweek. But, you know, I keep trying to, explain to folks is that this is going to affect what the Fed's going to be thinking about or doing in September, October, November. And that's absolutely going to have an effect on what that currency looks like, how strong or weak the dollar is. And obviously, how strong or weak the dollar is going to affect or could affect our exports. Am I right in saying that you kind of have to have an eye on those types of things as well as just hot and dry and or what's happening in the row crops or oilseeds?
I had the over, first of all, but 100% you have to be prepared and watching the dollar. And I mean, we have to watch a lot of things as market participants. Now, of course, if you're a producer or a farmer, you should be hedged, and none of this should really matter to you. But if you're trying to trade these markets, then you have to keep an eye on everything that can affect these markets. And the biggest thing affecting them now is there's no action, there's no market participants at the moment. And, you know, we could get them, but what we really see happening, Scott, is you see like today, we see corn down, let's say, almost 10 cents. Well, is it really down 10 cents, or is it just there's a lack of interest and there was a sell order that came in and pushed it down 10 cents? We're not getting the normal trading action we normally get, is what I'm trying to say. And I wouldn't expect for another couple of weeks before we'll start seeing it again.
All righty, well, hold that thought. We're going to go away, pay some bills. We're right back after this with Bubba Trading. Welcome back. Thanks for joining us. This is Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Having some fun here, trying to get through these markets. We've got the cattle markets up next, which is a cheap segue to go from the Cow Guy to cattle. Why don't we do that? I can't, pass that up, can I? Live cattle. Look at this table. Prices provided to us by bar chart. October is off 67 cents in the live cattle at 128.45. December's off 67 cents at 134.65. Moving right along. Get it? Moving. Oh, bad. That was bad. Okay, October is up 25 cents in feeder cattle at 168.67. We've got November up 45 cents at 170.40. Now, not to leave the hogs out of this, let's take a look at lean hogs. That's a solidly mixed board. We've got that October market, which is the front month, 85 cents lower at 89.87. We have December off 17 cents at 82.87. But Feb, April, and May, the FERDs are kind of coming in with small gains. February's up 2 cents, April up 10, and May up 12. We still have Todd Horowitz from Bubba Trading with us from Chicago. All right, Todd, what do you think about the livestock here? How are they acting, reacting? What are your thoughts going into this week?
Well, first I got to hedge the cow guy, but look, I think the overall picture is the same. I think we look strong. Look, cattle looks great. Hogs are right there at the precipice of either deciding that they're going to break out, and now that we're finally seeing some more positive action in the FERDs, I think that looks pretty good. We're going to go into, I think, a much bigger demand period coming up. As I've said all along, I think that the football season, believe it or not, I think is a big season. I mean, you've got millions of people eating lots of food in addition to the groceries they buy. And I think the charts bear out a very bullish opinion for cattle. Hogs, again, are very close, but I'm a buyer. I'd like to see them, and I think they will go dramatically higher from here.
Even though the dollar is a little stronger today, it's on your side still. I think that 93 is the level that I'm looking at on our screens here. Right now it's 92.72 last. But as long as we're below that 93 line, I think that we can stay competitive. And obviously if we go lower and we put a 91 in front of it, we'll be even more competitive. And that would then help a lot of the things that we sell abroad because we're going to look cheaper to our customers. So that is something I think is key. And that is something that's going to be affected by a lot of the other things that we wouldn't normally say we would get out of bed and look at. But with the non-farm payrolls on Friday, we also have an ADP on Wednesday. We're going to have to kind of pay attention here. So keep an eye on that. Thank you very much. That's Todd Horowitz, a good friend of the program, good friend of mine, coming to us from Chicago. And now we're going to have to give Tammy her turn.